Video for newly added series. Say in the financial management in new scheme they have added this 12th question in leverage chapter practical problem. There is no newly added question and illustrations. Let's get started. The following data have been extracted from the books of LM Limited. Sales, which is 100 lakhs, interest payable per annum 10 lakhs, operating leverage 1.2, combined leverage 2.16, and they have asked us to find out the financial leverage, fixed cost and PV ratio. Let's get started with the sum, and I wrote the data, given data, which is sales, interest, operating, combined leverages. They asked us to find out the financial leverages. First of all, for the calculation of financial leverage, we have operating leverage and combined leverage. Combined leverage is equal to operating leverage into financial leverage. This is the combination of both the leverages. So we have the combined leverage of 1.6 and operating leverage of 1.2 into financial leverage. In order to find out the financial leverage, we have to divide 2.16 by 1.2. We will get 1.8, which is financial leverage. After that, we have to find out the fixed cost. For finding the fixed cost, we roughly prepare the income statement, which is sales minus variable cost. We will get contribution, and after deducting the fixed cost, we get EBIT, and after deducting interest, we will get EBT. It is a format for preparing of income statement. In this question, I have given sales, which is 100 lakhs, and interest, which is 10 lakhs. And we have to find out the fixed cost. So we have the financial interest, which is 10 lakh. With help of this, we can find out EBIT and finding the fixed cost. To find EBIT, financial leverage is equal to EBIT by EBT, which we can also write as EBIT, which is EBIT minus interest, which is EBT. Financial leverage is 1.8, EBIT we don't know, we have to find it by EBIT minus interest, which is 10 lakh. Multiply this 1.8 EBIT and 10 into 1.8, which is 18 lakh, is equal to EBIT. When 1.8 minus 1, we get 0.8 EBIT is equal to 18 lakh. When we divide 18 lakh divided by 0.8, we get 22 lakh 50,000, which is nothing but EBIT we just found out. And after that, with the help of the EBIT, we can find fixed cost because of operating leverage. For operating leverage, which is contribution by EBIT, when we divide contribution by EBIT, we will get operating leverage. Contribution we don't know. Operating leverage we have given 1.2, which is 1.2 is equal to contribution by EBIT we just found out, which is 22 lakh 50,000. When we multiply this, we get the contribution, which is 22 lakh 50,000 into 1.2, which comes to 27 lakhs. When you found out 27 lakh contribution, then we need to find the fixed cost, which is the balancing figure of these two. When we minus contribution minus EBIT, we get fixed cost. Fixed cost is equal to contribution minus EBIT. Contribution, which is 27 lakh, we just found out, and EBIT, which is 22 lakh 50,000. This is also we found out in the earlier solutions. And 22 lakh 50,000, we get 4.5 lakh, which is fixed cost. We found out the fixed cost also. We found out financial leverage and fixed cost. Then we have to find out the PV ratio, which is nothing but the profit volume ratio. Contribution is a profit, which is the operating profit. Profit by sales into 100, we get PV ratio. PV ratio is equal to profit, which is contribution by sales into 100. Contribution is 27 lakh, sales is 100 lakhs, into 100 we get 27% as PV ratio. That's it guys, see you next time, bye bye.